last night's headline, Nova Scotia home prices continue to lose steam. Well, if you don't know anything about the market, you look at that and think, wow, what's going on?
Yep.
But you have to discount 2020 and 2021. They were anomalies.
Yep.
We have never seen growth like that. We will probably never see growth like that again. So you go back to 2019, the sales activity is up 6%. You go back to 2017, we're up 22%. So you can't really compare this year to
so
2021 and 2020 because that growth was unsustainable.
When I was broke, I had rich habits. When I was broke, I had rich
Welcome back to the
habits.
Master Keys Podcast. I'm Neal and Chandler.
I'm Chandler Halliburton. I don't know what episode this is. Episode 2, Season 2,
Episode late in the year. You saying 44?
44. Stephane Richer.
That's crazy. Anyways, this is your first time here. We're both real estate agents. We have a team. We've sold $500 million worth of real estate.
Yep.
We own about 200 units. And the goal of our podcast is to help you understand real estate investing, help make some decisions. We're not financial advisors, but we do our best to share our experiences, our listeners' experiences, and hopefully that can benefit you in growing your wealth, growing your portfolio, and moving forward with the things you want to do in your life.
Yeah, and if you find anything helpful today, please like, follow, subscribe. We've been getting so much engagement from you guys lately. We really appreciate it. So we're going to answer some of your questions here today. We also are going to go in depth and answer all of our Patreon questions on there. We've got a lot of things to cover. We've got a great guest on today, Roger, who's the CEO of NSAR. That is our provincial governing body for the region that we trade real estate in. Yep. And we put him on the spot with questions about the market, what he thinks of these interest rates, where he thinks things are going to head here in the new year. So we're getting it from someone who's got access to really the most data of anyone in the province.
100%.
So excited for that conversation. We're also going to talk a little bit about the interest rates. Obviously, that was big news here last week.
Always.
No surprise, but it always still stings a little bit.
It stung a little less this time.
It did. And this is what I wanted to get your take on a bit. Because so for those of you who are maybe not up to date on it, the Bank of Canada raised rates yet again as expected. You and I were kind of on the fence, 50 points, 75 points. But because inflation was still so persistent in for last month's the announcements, I was beginning to think that they were going to do 75 points.
Honestly, after we went to the BOC lunch, I was convinced they were doing 75 because just they were dancing around the questions. Everyone's like, any sort of guidance?
Jeff was fired up.
Is there any hope in the world? And they just avoided it at all costs. And so I was like, oh.
Well, he was saying
75 for sure.
Yeah, he was saying it's 2%. We're getting it down to 2% inflation no matter what we have to do. It's like that sounded a lot like a 75 basis point increase. And then the Fed had done their last one that was 75 points. And then the data out for September was not good when it came to inflation. So I think a lot of the market was building in around 75 points expectation. And it was only 50 points, which increased the bank rate to 3.75 and the Canadian prime rate to 5.95, which felt like a win.
It did feel like a win. It still sucks, and it's funny that we now call a win only 50 points because those are huge hikes. Usually they're done at like 0.15 and 0.25s, and now we're getting a 0.5 at once, and we're like, oh, this is a win.
They hadn't done an increase of over 25 points in about, I think it was 22 years, something like that. They'd never increased more than 25 points at one of these announcements, and they haven't done
a string like this in like 60 years.
Oh, they haven't done one less than 50 points in an announcement now going on however many announcements it's been in a row. What does that indicate to you?
Yeah, well, this is the optimistic side, which you guys rarely hear of from me, but it feels like they're starting to see, okay, we can only do so many rate hikes before it gets to a point of actually causing serious damage to the economy, and that we need to do other things to help rein in inflation. And so now interest is where it needs to be, and they're going to start changing other policies, other things that are taking place in the economy to help rein it in. So the way it feels to me is hopefully they start to taper it off. Maybe we get another 25 or 50 in the next hike, and then it starts to slow, and it just kind of sits at maybe 25 hikes or zero hikes. A few of them in the spring that are just zero. Nothing changes, and they just hold because I do think they're not going to just start going up and then going down. I think they're going to hold it at a high rate for a while because that's to allow the impact to take place. We've talked about that. It takes 3, 6, 9 months, if not longer, for the interest rates to impact everybody. And so they're going to have to hold it for, I'd say, probably at least a year next year, or maybe 9 months. But I'm having this hope on the inside that they're going to slow the hikes. We're going to get to a level that's sustainable because I've had a few people this week be like, oh, we're going to 15%. And I'm like, the thing with them going 15%,
Yeah, it's not happening.
well, the whole friggin' country would go upside down. Like,
Yeah.
everyone with a mortgage would pretty much lose their home. Like, it would be absurd. So many businesses would shut. Like, it just,
The market would collapse.
The market
so it's
would
not just people
collapse.
losing their homes. Like there would be no wealth, and like the wealth that people had built up for like 2 generations would be erased pretty quickly.
real estate and business.
Yeah, exactly. So
How are you
not
feeling
not
about
not to toot my own horn, but toot. No, but you know how I said that this does take time. I think they are
Yeah.
realizing maybe around here is where we feel the rates like can be and should be and will have the impact. And though it's not coming now, it's not coming yet, I should say. Hopefully they're now feeling like, okay, we need to see where this takes us 4 months from now.
Yeah.
Right? Maybe they just lay off for a little bit and see what does this do to the economy. Because I think they haven't given these rate changes enough time to take effect and to really show the results. And I mean, here we're talking like they made no change at all. They still increased 50 points, right? But the other thing we talked a lot about was maybe these rates aren't doing what they think they're going to do. And at some point,
So many
you have to
external
say
factors.
no mas, right? Like we've tried this, it isn't working. It doesn't show signs of working in a short time frame. So our last recourse is to just give it some chance to filter through the economy and see what becomes of our economy at this rate, as opposed to the free money that we had for 20 months leading up to this.
Yeah.
So I think they are coming to that conclusion. Because make no mistake, if we had gotten this sort of inflation resistance, and if we were in this situation, say 3 months ago,
Yeah.
they would have increased it by 100 points. And that's why this felt a little bit like a win.
Yeah,
Like
exactly.
this would have been an automatic 100 points 3 months ago. So the fact that it is less than that, despite some other indicators, is a sign that I don't want to say they're losing their resolve, but they're realizing,
They're reaching
like,
a ceiling.
things are shaking on the wall, right? Like we're when you see those space shuttles on reentry and everything's like just shaking,
Yeah.
that's what's going on. And we'll see what they do in December. There's still a lot of expectation they'll do another 50 points in December, but there has to be some people in that room making those decisions that are looking around and saying, we've got to give this some time. We also need to realize that no matter what we've done so far, it hasn't had a short-term effect. So maybe we shouldn't just, keep hammering our head against this same wall. So
Yeah. No,
I don't know. I felt good about it. It still sucks, right? It's still terrible.
Yeah, 100%.
And I posted something on my Instagram that I saw, was that if you had a $500,000 variable mortgage with payments that could increase or decrease with a 30-year amortization, your payment in February was $1,712.59.
Saw that, yeah.
And next month in November, it's going to be $2,773.83.
month on a
So
very
over
reasonable house price.
$1,000 a month on a $500,000 mortgage. And in February, it was very common for someone to take a $500,000 variable rate
$1,700
mortgage.
wasn't bad. You're either renting a 1-bedroom apartment or you're buying a full-size house.
Yeah. And again, people say, well, those idiots should have taken a fixed. Well, they wouldn't have gotten a fixed because they likely would have been, they would have been
Approved
stress
based on
tested
that.
at a higher amount and maybe they could not have qualified. And in February, that was kind of the height of the craziness. So if they wanted to qualify, if they wanted to be competitive in that market, they had to opt into the variable rate. And they are up $1,061.
It's disgusting. That's
in
huge
this
on a
amount of
monthly
time.
basis.
So that's the real world implication of it.
Before we jump into the news, did you change your skincare routine?
I mean, thanks for noticing. I've been moisturizing regularly.
Yeah.
Um,
Exfoliating?
what's that?
Were you exfoliating?
Exfoliate. Like I don't even want to get into my exfoliation program, but that's a whole separate. That's on the Patreon. You can check that out.
Okay.
but,
All right.
yeah.
Sorry. You're glowing.
Thank you. Thank you.
Anyway, so yeah, I think we're hopefully hitting a ceiling on the rates. My biggest concern is what they're going to change on the policy side to help rein in inflation. I've screamed about it a few times about immigration changes potentially.
Yeah.
And that would be really impactful for the Canadian economy because, again, we've discussed it before, but we're not a industry-heavy country, and immigration really is a big part of the business that this country is in. And so
yeah.
I really, fingers crossed, hope that they don't put a pause or a freeze on that because it would have a massive impact across the board. But the housing crisis that we're facing across the continent kind of makes me think that this might take place, especially with rates being up, because that doesn't help construction projects. I was speaking to somebody who is in that world of large scale subdivision developers, and I'm hearing the rumors that they're freezing a lot of their plans to build out the remainders of their subdivisions because they expect, well, they're already facing it now that people are putting new homes under contract because they're approved at $800K. This was 6 months ago, and now closing date's coming up, and they're getting retested because you can't do a rate hold for 6 months.
No.
And when they get retested, they no longer qualify, and they're unable to close. And the builders don't want to be known for penalizing everyone and stealing all their deposits because of the unfortunate situation, but they also can't be stuck carrying 30, 40, 50, 100 houses, depending where they are, that are unable to be sold, right? Like their business is a cash flow turnover business. And so if they can't get those sold, then they're going to lose their opportunity to bank and to continue building. So it's gonna be interesting to see what also comes out of this.
100%. And it's interesting because a lot of that stuff, even the immigration as well, is legislative, federal, provincial policy moving forward and what that's going to look like. But in line with the housing and the new construction stuff, there's a lot of news around that with provinces trying to be very proactive to encourage more housing. We're going to talk about that as well, which is the last thought with the rates. I don't know, what are you seeing out there for residential fixed year, 5-year fixed? I kind of dug around a little bit, but, there's always asterisks by all these promotions they put out there.
Yeah, I was going to say high fives.
Yeah, most of the stuff is like mid to high fives, and then if it's got a rental component, you're another at least 50 points above that. So I've got people that are kind of lucky and somewhere there in the upper fives. I know that there's a couple promotions on for just strict single family residential at like as low as 5.29, but I think most of those are upper fives. The reason that's relevant is the prime rate, as I mentioned, is now up to 5.95% after this latest hike. And most people who are on variable-based products are prime minus a half. You might find someone that's prime minus a full point.
Yeah.
But most of them are prime minus a half. So that means right now a lot of people are on variable-based products around 5.45.
Yeah.
Some as high as the full 5.95, and then maybe some lucky folks out there closer to 5. But we are in this world right now where the 5-year fixed, the current stated 5-year fixed are in a lot of cases better than what someone is on with their variable rate. And
Very
I think
so.
it wasn't that long ago that there were still a couple fixed 5 years available below 5.
Yeah.
Now, you talked a little bit about what you expect for in the new year on the rates. And this is what people have been asking me lately, because I do genuinely feel like we're coming to the crescendo, if you will, of rates. Maybe there's another 50 points. But it's not like we're going to roll over and they're going to come down as quickly. They will not come down as quickly as they went up.
They
no
have
way.
to hold them for them to have their impact.
Yeah.
By them rating it 50 points there yesterday, it's not like, okay, now the impact's been made, and then in 3 weeks we're done and we have to do something else. They're going to have to hold that now for 6 months, 9 months, a year to really see what the impact take place. And I again, like you said, they're obviously understanding of that. And I think that's what they're targeting, is to have inflation back at that 2 by the end of next year or the following year, right? Like start bringing it back over the course of the year. And they're going to, because like you said, payments, like example, $500,000 mortgage, it's $1,000 more if you're on variable. So people are going to have to rein in their spending, because that's $12,000 of after-tax money. Like that's huge.
Yeah.
So anyway, let's get into something a little bit more fun.
Oh, yeah. Speaking, some people are still buying stuff out there.
Some people are still buying stuff. My boy, Elon Musk. We talked about it a little bit when he made the bid for it.
He actually has the same skincare products as me. Some people say our lips look alike. I don't see it, but you tell me.
I can, yeah.
Oh,
no. Yeah, that looks the same.
Elon?
That's a little bit the same. But anyways, my boy, Elon Musk, he has purchased Twitter. He closed on it for a measly $44 billion.
I thought he was going to walk.
Everyone was like, oh, he's bluffing, blah, blah, blah. He's just talking off. No, Elon pulled through. He bought it, $44 billion. This was kind of a flex, but day he bought it, fires the CEO and CFO. Just like bingo. And he blocked Grimes, his ex.
Blocked her on Twitter?
He deleted her, off Twitter.
Oh, no. He removed her entirely?
As far as I understand, that she has been removed
check that.
from Twitter.
You know what I think put it over the top for him? Is that like Kanye West going crazy. And Kanye West is being blocked from all the platforms. Yeah. And I feel like Elon is so twisted. He's like, nope, Twitter's meant to be this community town hall. And in a weird way,
That's what he
Kanye
said.
being on Twitter is good for Twitter's business. This is the sick, twisted world that we live in because people want to go there and watch the train wreck.
His reason for buying, like you said, is he wants to have a digital town square where people can share their beliefs and thoughts in a healthy manner.
God.
He said
There's some people's beliefs and thoughts that I don't care about, and I don't.
nobody wants to know.
Yeah.
But he said that he's not interested in being like a free-for-all space, like kind of what Trump's building with his platform. But I'll be curious to see what he does with it. It is, again, kind of sketchy. It's similar to the idea of Jeff Bezos buying the Washington Post, and then now Amazon is publicized as being such a great company.
Yeah.
Elon arguably owns one of the more notable news companies now because realistically, in my opinion, the Washington Post is feeding to an older demographic, and I think Twitter is feeding to a more new demographic,
Yeah.
right? Like I see everything now, it's screen caps of tweets.
Yeah.
And everyone follows what all the famous people are doing, including politicians and presidents and like
Oh, it's
rulers of
become like a
countries.
go-to means of communication, even
Yeah.
for the government.
And quick, it's a quick means of communication. Like nobody
Yeah.
can be as fast as Twitter because literally the person in power is immediately able to make a tweet at their desk and it gets posted. Versus
better
like
or worse.
an article could take a day or two, a news story can take time, and it's oftentimes filtered. Now Twitter, I mean, anyone who's in a serious place of power is not making their own tweets, but it's
Well,
it's arguably less filtered than the news. But anyways, so yeah, he's out there buying. I'd be curious to know how he did. I think it was through stock and cash, obviously.
I just want to know if he went variable or fixed.
Oh, what's the payment like on
what
a
is the
variable
payment
at
on that?
44 bill? So,
Yeah. I mean, I'm also curious to see if Twitter maintains its structure because you can see on Instagram how Instagram's just trying to become TikTok, right? Like they're actively trying to do that.
Yeah.
And what was beautiful about Twitter is for the most part, it is stuck to what it is, right? Like for the most part. I'm not a big Twitter guy, but like,
I'm not a Twitter guy, but they've carved out a niche that's valuable. It's funny. I think when Twitter started, everybody was on it, and everyone's still on it. But I think the idea was everyone went on it and everybody posted stuff like tweets. But then you come to find out that nobody cares what most people are doing. So the
Fact.
value is really in the influencers, again, the political people,
Yeah.
the large CEOs of companies. It is a great platform for them to quickly spread and say something to all of the people that follow or are interested, whether they work for them, they live in their country, or have vested interest in something that they're doing. I think it's actually a really good platform for that.
Well, it's
but I think
interest-
when it opened
yeah.
and it first went public, people had the weird perception of like, oh, this is going to be a platform for me and you to communicate. Like Chandler and I are going to be like,
What's
chilling-
Neal having for lunch?
yeah, exactly. Chilling with T-Chan, like it, but nobody cares. But
Yeah.
when it comes to like very high social presence people, I think it actually has a niche there, and there is value.
You also mentioned journalism with the Washington Post and Bezos, but I find Twitter's a good space for, it's no one's picking up a paper, right? But if you want to seek out journalism, Twitter's a good place because people will post there, they'll link to articles, which is ironic because a lot of more liberal journalists really opposed Elon Musk's purchase of Twitter.
Of course.
Which, if you take him at his word, which we'll see how it all plans out, his idea was just like, no, more free speech and more, uncensored content, so people can have a freedom of access to information, whether that's right, wrong, or malicious, that remains to be seen. But you'd think more journalists would be on board for that.
100%. It's such a tough thing, though, because the second you say free speech, then someone's going to go on there and say something like very hateful.
Yeah.
And they're going to be like, it got removed. That's not free speech. And I'm like,
Yeah.
well, yeah. But there's also like, we need to just be a little bit more good to all. Everyone needs to be a little more good to each other. We don't need to see the opportunity of like, oh, free speech, no laws. That means like we just be a complete and total asshole.
Yeah. But you can make a case, though, if you look at, say, what happened to Kanye, and we're really getting weird into pop culture here, but and Kanye's obviously a different case because he's got some mental health issues, I would say. Sometimes it's good to give someone enough free speech that you can realize what an idiot they are, and then they can reap the consequences, right? Like, think of how many people over time, they had really good PR people around them, and little did you know that deep down that they were a piece of garbage.
Yeah.
Right? If you give them a microphone and then they can reveal themselves to be a piece of garbage, then you can be like, you know what? I'm done with this person. Right? Because that's how free speech and exchange of ideas is meant to go, is that you're supposed to have these conflicting viewpoints and you're supposed to argue them. That's discourse, right? Some back and forth. And then potentially, I don't want to say cancel, but if you're like, you know what? I didn't know that's that person's viewpoint, and maybe I view them in a different light, and or maybe I accept that they have that viewpoint, and I understand where they're coming from, but I disagree with it. Like that's what is meant to happen.
Yeah.
An open exchange of ideas. And with Kanye, it's like, yeah, so now no one wants to work with you, and rightfully so, right?
Not to dive into the Kanye thing, but for 1 second, just how like confident and basically cocky he was when he said what he said. He's just like, they can't even think about dropping me, and I'm like, and then Diaz is like, yeah, we can.
I also love that he rolled up into Skechers next. Do you see this? He's like, I'm gonna take him to Skechers then. And Skechers is like, no, thank you. And also, like, can you imagine like all these dudes rocking Skechers? Oh, you see the new Skechers Yeezy? Oh my god, they're so good. I'm like I'm walking on pillows.
The new lawn mowing shoe.
Oh my god. So yeah, we covered all that inflation stuff. Covered your boy, Elon. I wanted to talk a little bit about some provincial stuff because this has been big here locally, and I was kind of humming and hawing about talking about it. But there's a lot of listeners across the country. But interestingly, now parallels are happening in BC and Ontario, same as here, and that is essentially the provincial governments seizing influence, if not full authority, over the housing situation.
Yep.
And they've got the perfect opportunity to do it because people are clamoring for change, saying there's not enough houses, not happening quick enough. And so the provincial governments come in and say, we're just going to take the wheel here.
Yep.
And we're going to supersede the municipal because the municipalities are taking too long. Their zoning and bylaw restrictions are jamming us up. So we're going to throw our weight around. And that's happening right now in Nova Scotia. We're in the midst of it. It's happened already with a little bit of power to veto and to override plans or approvals at the municipal level and to fast track certain projects. And then the new Premier, David Eby, out in BC, I want to outline his platform here. This is when he was running for the leadership of the NDP, which then made him Premier. So, 1, override municipalities to allow secondary suites.
Yeah.
2, allow single-family homes to become 3 units in urban centers.
Yeah.
3, abolish all rental restrictions on strata buildings. 4, if municipalities fail to meet quotas for new home approvals, the province intervenes. 5, whatever I'm on, tax properties flipped within 2 years. You flippers out there, burr people, you're not going to love that, and that's coming across the country, I can tell you that. That's something that the Liberals had in mind federally. Fast-track multi-unit developments, which is something near and dear to our hearts. And then this one is interesting, earmark $500 million to buy existing older apartment stock. I think that's awesome. I think it's a great idea. I think it's exactly what they should be doing, and we need to follow suit. So that's what the new Premier of BC has been talking about. In Ontario, Doug Ford has outlined his vision. So the first thing he wants is 100 or 1.5 million new homes in 10 years. He wants to change zoning to allow 3 units in single-family dwellings, again, very similar to BC. Less development charges at the municipal level. Quick approval for anything under 10 units. Repealing some of the environmental and heritage protections. That's one that here in Halifax, that's a big one. Superseding municipalities, just being able to overrule them.
Same thing, yeah.
And then limiting appeals and public consultation, which is also what happened here in Halifax. So the developers and people who are putting housing first and foremost above all else are really gung-ho on this.
Yeah.
Make them cheaper to build, make them quicker to build, and allow small infill, invisible density. 1 unit becomes 3, under 10 units gets fast-tracked, blah, blah, blah. The naysayers are twofold. 1, the municipality saying, now these external forces can influence our process, which is to hear from the neighbors, hear from heritage, go through the public consultation. We've mapped out the city with a clear vision in mind, and now you're cutting us off at the knees with this. So it's interesting, though, to see that trend in arguably the 3 hottest markets over the last 2 years, which are, Vancouver area. Obviously, it's BC, but it's focusing on Vancouver, Ontario, specifically Toronto and surrounding, and here in Nova Scotia.
Yeah. So let me get into the BC side of things first. So I think the secondary suites and turning single-family homes into triplexes, I think that's a good thing. You go into any big city that has housing under control, majority of their housing is like low-rise, densified properties. It doesn't need to be a bunch of towers. They just mix it in.
Montreal does a nice job with that.
Montreal does a great job of that, and they have very affordable housing relative to the rest of Canada. And also for people who are concerned about it, honestly, if your home can be converted, it's going to add value because the person looking to buy it, even if it's a young buyer, it's like, oh, I can add a basement apartment in here and actually live in this house. People will see at the bottom end, they'll see the value that I can buy this house and turn it into a triplex. So it retains some level of value.
Yeah.
Yes, it might add more people to your street and a bit more density and traffic volume. But again, that's a very selfish thing to consider only your ability to live and nobody else's.
That's NIMBYism, yeah.
It's exactly, that's that NIMBY. So that one I think is good. The idea for the province to intervene, I also think that's good because it puts, so again, if the municipality doesn't meet its housing requirements, a province can intervene. I do think that's smart because it puts a lot of pressure, and I think it's working here in Halifax because we haven't met our housing requirements, and so there was a big concern, and so now they've really ramped things up to try and pick up the pace. Taxing properties flipped within 2 years, I'm not in love with. I'm not too concerned about it, really. I guess maybe not because it's not something I do a lot of. But I don't think like adding a tax is going to save anyone by doing that. Like the people buying those homes are qualified and prepared to buy them, and I don't think people are losing houses to a massive number of people flipping them. So I don't think like your home is almost one of the best ways to make wealth in North America.
Yeah.
And so to kind of suck that away, I don't think is a great thing to do.
Well, flip is also how a lot of people, it's the only way they can enter the property market. So by punishing that, you're effectively making it harder for people to do that. Additionally, the person who buys that home and then flips it, they often buy another house, so that home opens up for another buyer. Like it is actually increasing turnover, which can be advantageous.
And the second you add this tax, we've talked about on the multi-unit side, because there's obviously already capital gains on those. The second you add that tax, now people are going to be like, now I can make this into a 3-unit. So instead of selling this and getting taxes, I'm going to throw a basement apartment in and an upstairs apartment in it, rent it, keep it, and buy another house.
Yeah.
And that's, again, it does add housing in some format, but a lot of people will not be happy with how that's going to work.
Yeah, yeah.
But maybe that is the objective.
Yeah, or I won't just resell it, just Airbnb it.
The $500 million to buy existing older apartment stock, I think, is great because we've talked about it before.
Totally.
To run truly affordable housing, unfortunately, it can't be done on a private scale because it's just, there's no money at all in it. And yeah, I understand people are going to be like, well, they just don't need to make so much money. It's not even about making so much. It's about the fact that you're losing money. And unfortunately, people can't afford to just lose. Like that business model does not work. That investment model does not work. And so my idea on that, and I've talked about it before, was the problem with the $500 million to buy existing housing old stock is I think they're probably going to be like, okay, how are we going to decide what something's worth? We'll get an appraisal. Well, come to find out, probably 75% of old inventory sells for more than appraisal across the country, even more so in other provinces. We're not as bad here, but in other provinces, people are putting down 50% because the places do not appraise out. So I think they're going to struggle to get the inventory.
I think also they're probably going to say, oh, we've got that money earmarked to then give to housing trusts and co-ops who then have to go out. The challenge is they can't qualify for mortgages under our current setup. So it's like, cool, you give $2 million to this housing co-op over here, but they can't even go out and turn that $2 million into an $8 million purchase price. They have to go out and buy a $2 million building. Like, what's a $2 million building in Vancouver?
In Vancouver?
Like a single-family house?
Yeah, exactly.
So it's going to depend on how they roll out that money for sure.
But I think this would be something really interesting for them to look at doing, and it might help to convince a lot more people to do it. But it's if you sell to the province or you sell to your municipality or you sell to the federal government, you get a tax incentive for doing so. And that would make them so much more competitive. Yeah. And I understand everyone's like, oh, now the developer just makes more money. But realistically, it's a great way to incentivize people to sell to the government effectively to maintain them as affordable housing. Because right now, instead, they're going to sell them to another developer who is going to pay even more money. So they're going to get, at the end of the day, the person selling is going to net the same amount of money if they sell to a developer, but the next person is likely going to increase the rents.
Yeah.
If the government buys it and they give the tax incentive, then they're going to be able to keep it deeply affordable and actually sustain an affordable level of apartments.
Yeah, and if you listen to like what the government says, they do say, oh no, yeah, so when that private developer buys from the private owner, we charge taxes in there, and then we promise we're going to use that tax dollar to fund affordable housing. Well, they never have. So your program is like, no, this is direct 1-to-1.
Yeah.
These are affordable units now, relatively speaking. we're going to buy them and keep them affordable. We're not going to get into the like, okay, we tax that person. We take that tax money to hire all these people to then distribute that tax money to build new affordable units or to then subsidize other.
Which is clearly not
keep
working.
Keep it affordable. Like stop it right at the beginning. That would make a lot of sense.
The current tax roundabout is currently not working.
Oh,
so
it's not because it gets dripped away. People pull off.
There's so many so many inefficiencies between when it comes in to when it gets out. It's like a charity, right? Like the money you donate 100 mil, but 5 million of it actually makes it to the people that need to receive the charity. The one thing I want to offer you, Doug Ford list, or was it Tom Ford? I don't remember his name.
Doug Ford, yeah.
Doug Ford.
Tom Ford. That's fashion design.
But he mentioned in there to remove or reduce developer fees and permit costs. Honestly, even though like I know you've paid a ton of them and I will hopefully pay a bunch of them in my future, I'm not necessarily super keen on that one for the simple reason that I'd be happy to pay those, assuming they make the development office, the permit application office, really proficient with professionals that work at a proper pace.
Yeah.
Not saying they're not professionals now, but I find the pace is broken and it's not necessarily their fault. They're
hire more of
understaffed
them.
relative to the amount of work that there is. But realistically, we've talked about it, affordable, new construction cannot be affordable. And so new construction has to be the luxurious, the more expensive stuff. And there is money in luxury real estate to pay for all these permitting costs and all these taxes and fees and still make money. So I don't think on that end, it's the end of the world for them to do it. And realistically, I think the permit costs still work out to be a small percentage of the overall cost of a building. So again, I do think it'd be a good thing to do, but I don't think that's the way that's going to save the system. And I think that's going to pull money away from a department that needs it. I really do think more so they need to focus on allowing the new stuff to grow and be built and fast tracking those approvals while buying out the old inventory or creating an incentive to keep old inventory at a low rate. Because the only reason that people are turning these over is because you can turn them over and get them rented at high lease rates. But if there was 1 million new luxury buildings, you'd never be able to do that.
Yeah. What do you feel, about the fact that they are effectively squashing municipal authority on some of these items? I heard something the other day, and I thought it was so ingenious. The federal government has all the money.
Yeah.
The provincial government has all the power, and the municipalities have all the problems. And I thought that was a really interesting layer of the power dynamic that we deal with, and it's so true. Like all of the stuff that we're struggling with here in the city is very much at the city level, right? Be it homelessness, be it the housing situation, those go hand in hand, obviously, and all of these things that we're trying to address and plain, like it is very micro on the municipal level, but so many things they don't have the authority on. Like the municipal government has no housing mandate whatsoever, which is proven problematic, and I really love the work that gets done at the municipal levels. However, they're understaffed, they are slow, they are cumbersome, and so I understand this desire to intervene, but philosophically, like democratically, I mean, we elect people and we have this public consultation at a municipal level, and it's going to be superseded by a provincial government that also may be influenced by a developer that is outside. If you're a developer who does all of your work outside this municipality and you've got influence on the provincial government based on the government representatives in one municipality, and then you pick up a piece of land and want to do a project in another municipality. Yeah. There is this, even within province, like, people from outside of your town, city, whatever your municipality is, very much influencing what's going to happen down the road from you.
I'm not opposed to it because I think, like you're saying, where on the municipal level they take all the heat effectively, everyone's beating on them because they're right on the ground level, their boots on the ground with it. It's hard for them to push things through because they're going to take so much heat. Whereas if it's at a higher level, that's a good point. When it's at a higher level, at a provincial level or a federal level, they're like, this is just a mandate and we have to push it through. Yeah. And unfortunately, not everything. There's so many people in this world. Everyone has a different opinion, and some things just need to be pushed through. We don't have time for every single person to weigh in their opinion. And unfortunately, a lot of people are not educated to a level that they necessarily should be involved in the decision. Right? I think, like we said, a lot of this is NIMBY. Like it's people are like, the only reason I don't like this development is because it's close to my house.
And you're right. And then the municipal person who's like, oh, I also live down the street from that person, and now they're going to hate me. And I've heard stories, true or not, of a municipal councillor saying this to the other councillors, I've got to say no to this because everyone will be mad at me if I say yes. but I think it's the right thing. So can you guys all say yes? So I can
Exactly.
still say no and look good? And you don't have
Versus-
that when the province just comes in big swing and it says, this is what we're doing.
Exactly. The province
Yeah,
comes in and says
yeah.
it. Then those guys can be like, well, we're just doing as we're instructed, and we have to do what we're being told to do. And I think there needs to be a certain level of that just being done, because this constant public consultation, I think they can keep public consultation, but they can't have like 10 of them. And it's like, go to public consultation. We have it. Here's pretty much what we're going to do. You guys give your feedback. We'll take from it and add what we can.
Yeah.
And if there's something extremely pressing, we'll make a serious change. But it's not like we're coming back to this 4 more times. You guys said, okay, we need to do a little bit more green space. Go back to the developer. Okay, can you guys add in 5% more green space?
We're moving on.
We're done. Let's move on.
Yeah.
Yes, it's not the 40% more green space they asked for, but it's better than it was. And overall, we have a board of 10 people that they do this all day. They might have studied it in school. They've been involved in the city or the province
said
for years
yes,
and years and
so
years.
here we go.
They have the best.
Yeah.
You know what I mean?
Yeah.
Because those people also want to see like a good city. Like the people that are in planning oftentimes have gone to school for it. They're passionate about it. Like they have an idea. So
Yeah, what I also thought was interesting is obviously we've got a conservative provincial government, Doug Ford, conservative Ontario, but to see it also David Eby, NDP in BC, this
Mindset's
trend
changing.
seems to be, across parties. So very interesting, very interesting.
on a similar note to the development and cities making changes, sweeping across the states for the last few years, different municipalities are banning fossil fuel hookups in new construction. So what that means is like when you build a house, you are not allowed as a builder to set it up to
oil?
receive gas, propane, oil.
I'm going to show my ignorance here. They consider, well, I guess, I was like, really, not even gas?
It's fossil fuel.
Yeah.
Now,
What?
it's like New York,
What are you
Boston.
gonna
Like
do,
it's,
just like hook up a compost bin to it and be like, here you go.
yeah.
We'll do a couple like lemons run into a
you have
car
to
battery.
compress your compost into bricks and burn that.
Oh my god.
No, but the idea is that space heating and water heating make up 40%, estimated 40% of greenhouse gas emissions. And so the idea would be to centralize these things for electricity production at a high efficiency level, right? Because one giant power plant will be 10 times as efficient as your personal natural gas furnace in your home. And then the distribution lines are already in place for all electricity. Heat pumps are also infinitely more efficient than pretty much every other type of heating source in your home. So basically, they want to remove all of those items. And eventually, the other idea is obviously at a federal level and even at a state level or provincial level, they're mandating that the energy producers have to go green. So it's much easier to say, okay, everyone has to use electricity, and now we're going to go to the electricity producers and make them become more efficient. And so in turn, the second an energy producer becomes 10% more efficient, every single home just became 10% more efficient. Versus trying to say, okay, now everyone's on furnaces, so now we're going to put out programs to try and convert everybody to heat pumps.
Just random cities are doing this? At a city level?
Denver, Boston, New York, like big boy cities.
We'll see how the states intervene on that, because I could see a similar level of intervention from at the state level saying like, no.
Same with this was one that I was like a little bit close to home because I just bought my propane stove, fossil fuel powered appliances. I was like, you can't get rid of the propane stove. There's so many people out there that are like, you cannot abolish the propane stove. It's the best way to cook.
Well, here's the ironic thing here in Nova Scotia is that Nova Scotia Power burns coal. And I know they're trying to phase it out, but people who switch over to power here in Nova Scotia for like the good of the environment, it's laughably ironic, and they're doing the opposite. Now they're trying to push towards that.
They are
but,
improving
like,
very quickly though.
Like they're just burning that coal. But
They're improving very quickly. But anyways, I thought that was interesting. It's been going on for years. This is not a new thing. I was just reading into it, and I was like, this is an interesting idea. And I think, honestly, it makes sense. Like, I think it's the right move to make in a lot of ways, because having these little generation stations in everyone's home is not efficient.
yeah.
It's not efficient at all.
And this is a total digression, but you see our provincial government also blocked a proposed rate hike by Nova Scotia Power.
Yeah, this is a close to home one, but yeah. So our provincial government squashed a requested rate hike by Nova Scotia Power. It's up for debate on a lot of ways. I personally don't totally agree with the idea that they squashed it. It's funny because I have colleagues that work at NSP, and they're like, "No, I think this is good. It's for the better of everybody." But I think in the long run, it actually causes more damage. And Judy Steele mentioned it in all Nova Scotia. She responded to a few different people who came at her and the company of Emera, being like, "Oh, these people, this company's so rich, they make so much money." But really, Nova Scotia Power as a whole is a very low returning, basically generation company, asset company, and the big problem is the second that they start losing more money like this, or they make less money, less investment in more renewable resources will take place. Less investment in the power grid will take place because the money's not there. The second you suck out that $300 million, everyone's unhappy with how reliable their power is now. Do you think paying them less is going to allow them to do it?
Well,
and
it's also
they were a fairly reasonable rate hike relative to what the inflation numbers have been and how it's all been going.
It's also the same situation where like there is a utility review board,
Yeah.
right? And
A
their
very
job
intensive
is
one.
arm's length to approve,
Yeah.
and negotiate these rate hikes, and for the premier to just say, nope, we're going to overrule them. And why? Because it's a really popular thing to do with like the general Twitter universe,
You got a lot
social
of high
media.
fives for that.
You get a lot of high fives for saying, not EU, Nova Scotia Power. And I certainly don't love Nova Scotia Power, but we've entrusted people who know this stuff to say, does this make sense? And they said yes. And then the government says, well, we don't care about your opinion anyway. So then why do we have a utility review board? Why do we have them?
Also, again, if you're a landlord and you're listening and you are for the cap, just consider they did the rent control, and are you for that? And for all the reasons that we've talked about, the inflationary costs and all the expenses you have, and we've talked about in rent controlled places, the old deteriorated buildings stay old and continue to depreciate. So that's what's going to happen with our power system if basically a premier decides to make a sweeping move like that.
What else is going on in New York? There's something about hotels.
Yes, I was going to say the other thing that's going on in New York, sticking in that city, is 46 hotel properties, 10,000 plus rooms, have remained closed since COVID ended. So everyone's like, oh, COVID's over.
What?
Rooms are back on. Like, I can't get a room anywhere I go. So these places are making this huge boom because everyone's got money now and traveling's back. But 10,000 rooms are still closed, which is 8% of their inventory.
Staffing?
A mixture of reasons.
Yeah.
So obviously, a bunch of them were just keeping up with all their payments and operating costs running into COVID.
Okay.
And so the second COVID hit, they ran out of money.
Yeah.
So a bunch of them were foreclosed on. The next thing was startup and closing costs because they had to pay severance pays to everybody.
Right.
So to
Cancellations
close
and-
down
yeah.
or to restart, like the dollar value to do that is immense. Like it's crazy.
Yeah.
And so a lot of hotels, one notably that was actually close to me because I stayed there recently, was the Roosevelt. They've been open for 100 years and they shut down through this. And it's because, again, the amount that you have to pay in severance pays.
Well, also, you're like you said, to relaunch the engine, right? To get it started back up, you have to hire people probably 3
Retrain
to
all of
4
them.
weeks before you open, train them up, order
Inventory.
supplies. Yeah.
Like there was a massive cost to get, and then again, you're not going to be full when you open. Like we've seen new hotels open all over here, and it doesn't matter how good they are. It takes probably like 3 to 6 months before they get back to full occupancy levels. And then the other item was rental inventory, as at a record low everywhere. Even though New York had a mass exodus, lots of people have come back, and rental rates have remained very, very strong. So a lot of hotels were offered great deals from developers during COVID to say, hey, you guys are shut down. Doesn't really make sense for you to reopen. How about you sell us this location for a very inflated number relative to what it would be worth as a hotel?
Yeah.
Because we're
We'll
either going to turn these into
develop
luxury condos, luxury rentals, or we're just going to take the development rights, tear it down. You know what I mean? There's a bunch of options for them. So overall, looks like New York's losing about 10,000 hotel rooms.
It's interesting because I was supposed to go to New York actually right around now. I can't remember when I was going to go, maybe early November. And I knew I was booking kind of last minute.
Yeah.
Right. But I still thought I could find something reasonable.
Yeah.
The cheapest hotel that I would actually want to stay in, and I'm not, looking for anything too posh.
Yeah.
I just mean like somewhere you felt safe, secure, and clean.
Yeah.
In the Village, like I wanted to be in the Village.
Yeah.
It's like $790 a night.
What?
Yes.
I thought you were going to say 400.
No. I wish 400 was an option.
790. This is what we're facing in
$790
Halifax
a
too.
night.
Anything that you want that's decent is $400 a night.
And so I was like, I cannot justify this because it was getting to the point where to go to New York for about 3 days between flights, hotels, and then realistically, you're going to eat some food, you're going to maybe take in a show, even the drive to the airport.
The weekend's
and
$5,000.
Oh, I ran it. it was closer to 7. Like for 3 days,
That's psycho.
like
That's not. Yeah, it's not worth it.
you
It
gotta
gets
have
to
a
point where it's just not
lot of
worth it.
fun in those 3 days for $7,000. So that's why I'm here and not New York.
That's why you're here with me instead. I want to give you one more thing that
Why
COVID
is that
killed.
glove kind of wet?
I just washed it. Okay.
Oh my god, it was moist
It
to the touch.
I just
Jeepers.
watched it. One other thing that changed during COVID: real estate agencies.
Oh,
They were making a fortune. Money was flying.
you hear that?
Agents
shoe
are making
dropping.
money. I saw a stat. This is a quick aside. 2021 average Remax agent made $247,000. The average.
What?
Remax being
No.
the largest brokerage in the world.
I can't believe that.
But I think that was in Canada. But in Canada, the average real estate agent, Remax agent, made $247,000. They must have cut some people off. There's no way.
There's
but
no way because some are just like holding a license, but there's some of them that are really big.
I don't know. I saw that one in an
Disregard
email
that
today,
fact.
and I was like, what?
That's a Neal fact.
Anyways, what I'm really getting at is brokerages are making a fortune. So the company called Anywhere Real Estate, who owns Century 21, Sotheby's, Caldwell Banker, Cochrane Group, these are all names I imagine everybody's heard of. They had a massive year, making $150 million or something like that
Yeah.
in a quarter. And now in this most recent Q3, they're down over 50%, and they made $55 million. That is a huge, huge, huge hit. And they're already now starting layoffs, canceling acquisitions, and changes of commission splits, which is very interesting in a time when agents' incomes are dropping dramatically. For them to start pulling back and changing the commission split, meaning they have to pull more money from their agents or increasing monthly fees. It's a weird time in the industry. So I just want to throw that out there because everyone's like, oh, agents made a ton of money during this time. We've talked about it. We're experiencing it. We're seeing brokerages grow like crazy everywhere. Our brokerage blew up.
Yeah.
And now you're seeing this massive, massive pullback. Even though volumes are still up,
Yeah.
it's
And I thought you were crazy
Crazy.
for that stat that you threw out, but I'm going to think about this here for a second. So over the course of 2021, the
Yeah.
average house price in Canada across the board was probably around
700. It was 750.
$750.
Yeah.
And I would say Remax agents, the top performing agents in any industry, in any area, like we average a bit higher. So just for easy round numbers, say 800,000.
Yeah.
What's the average commission on that?
20K.
20K, maybe a bit less.
Say 16.
Say 16K. And how many homes does the average agent across the country do?
It used to be 12, so probably in these times, 20?
No, if it's just say 12 even though. What's 12 times 20 grand?
That's 192,000.
No, it's more than that. 12 times 20?
Oh, 20? Sorry, 240.
Yeah. That is close to your average. So while that sounded ludicrous when you said that, it's not outside the realm of possibility. But
I guess.
those
God
days
damn.
are over. Those days are over. And I'm
yeah.
not too sad about it. I just love the purge that there's going to be. On that beautiful note, we've got our guest,
Yeah.
who is
so-
the CEO of the Nova Scotia Association of Realtors. So should we hop on over to the other room?
Yeah, you should probably do another exfoliation, and then we'll hop in the other room.
Yeah, that's right. I got my whole team here. You can just do me up. But yeah, so keep watching. Thanks so much for listening to this point. Like, follow, subscribe. As always, if you enjoy anything you see here today, give it a little like.
We'll see you in studio, too.
All right, yeah, so we're transitioning here into our guest for today. We're super excited. Roger, thanks so much for joining us. Yeah, do you want to start with introducing yourself?
Sure. So my name is Roger Boutilier. I'm the CEO for the Nova Scotia Association of Realtors, and just want to thank you guys for having me on today.
Yeah. Have you ever watched any of our podcasts?
To be honest, I watched one in preparation for this.
Perfect. Because our realtors are probably a big, I don't know, they've dropped, they used to be like 75% of our listening audience, I think, and now we have a real normal audience, no offense, realtors.
When we started, I feel like a lot of them were our friends or we knew them.
Colleagues, yeah,
colleagues. And so they listened. I think, like you said, a lot of them have dropped off, but realtors are perfect for podcasts because they drive around all day. And so
that's true, too.
There's a ton of time for them to be listening and,
Yeah.
and kind of doing it. I think a lot of them still do. When we go to realtor events,
Yeah.
a lot of them they'll make comments and say hi or whatever. So I think we still have a
I think
large
also,
audience.
you know, that's the perspective we approach things. It's as a landlord and as a real estate agent, and so everything comes from that angle. And there's stuff like everyone that's in this grind can relate, and certainly right now it is a grind, and it's a new grind compared to the
grind that we just had for the last 2 years, right? So
Yeah, before it was a grind of stacking paper, and now we actually kind of work a little harder.
yeah. Before it was like, what do I do with all my money? And now it's like,
Before we
where's
go
my
into
money?
it too much further, because like we said, there is a bunch of realtors that listen, but for the non-realtors, do you want to just explain kind of what NSAR is?
Sure.
And what you guys do?
Yeah, sure.
Okay.
So we're a member-based organization. So in order for a real estate agent to call themselves a realtor,
Yep.
they have to belong to our organization. And by doing so, they abide by a code of ethics that's set out by our national body. They also have to take our mandatory or compulsory post-licensing, education.
Yep.
We advocate on our members' behalf, and we'll probably get into that later in the podcast.
Yep.
We administer the multiple listing service, or the MLS system. And we're there for our members, right? So we represent realtors from Yarmouth to Cape Breton. And
Yep.
right now we're at an all-time high of 2,060 members in the province.
How many approximately here in the HRM? I know we talked about this in an earlier episode. It got high.
So HRM is obviously our biggest component of that. I don't have it broken down, but the last time I looked, there was like 1,200 of the 2,060 in HRM.
I think I saw something in all Nova Scotia that was even higher than that, and how many of them were new, and how much growth we'd had over the last couple of years. It's something like we had something like 25% increase since the start of the pandemic, basically.
Well, we just had our numbers in yesterday for September, and we drove through like 60 people through the licensing course in September.
Holy.
So there's our numbers are 2060 right now, but there's more in the pipeline.
Actually
Once
get
they write the
licensed. Yeah.
exam
You know that
and then
episode-
join. So
There's this quote in The Simpsons that's like, have you ever looked at an oversaturated marketplace and said, me too? Like, that should be the pitch right now for people entering the industry.
The one thing I'm having a bit of a moment with right now is Remax has over 200 agents.
We have 235-ish, plus or minus.
That's insane. So you're saying, and there's 2,000 in the let's say 2,100 in the province. So we have a huge market share.
Yeah. Shout out Remax Nova. We are
Shout out
big.
Remax Nova. I didn't realize that. They're quite a large
So-
brokerage.
there's
Yeah.
4 or 5 larger brokerages in HRM, like there's
Yeah.
Remax, KW,
Royal
Royal
Page,
Page,
yeah,
Exit,
yeah.
Century 21. Those
Yeah,
are the 5.
yeah.
And I apologize if I missed any.
Well, yeah.
But I mean, there's still the boutique brokerages as well, and they're doing quite well.
Yeah,
Definitely.
yeah, for sure. I mean, so we're kind of like a lot of professional industries. We're sort of a self-regulated. We're legislated by the government, the NSRAC, and then NSAR. Your role is kind of self-regulation, I guess, for lack of a better term, but also advocacy and all that good stuff. Let's dive into it because I know.
Yeah, you didn't come on today to talk about NSAR specifically. You came on more to talk about the market and what's
Sure.
going on and give us some more information on that. So now, I guess, in the news, you're hearing about prices dropping and things changing so rapidly. What's kind of going on there? What are you guys seeing? You're very, obviously, like you have a ton of data. You have all the data from across our province. You
Sure.
probably see it from across Canada as well. What are you seeing, and kind of how are you describing what's taking place?
Sure. So I look at it probably a little bit different than the media looks at it. The media kind of
They're going for headlines.
overblows everything. They I look, subscribe to All Nova Scotia, and I look at last night's headline: Nova Scotia home prices continue to lose steam. Well, if you don't know anything about the market and you look at that, you think, wow, what's going on?
Yep.
But you have to discount 2020 and 2021. They were anomalies. Like, we've never seen that. I've been in the industry for 18 years.
Yeah.
We have never seen growth like that. We will probably never see growth like that again.
Yeah.
So you go back to 2019, the sales activity is up 6% from 2019.
Yeah.
Is it
So that was the last
Yeah.
real quote unquote
Normal
normal year we had.
Real
You
normal.
go
I
back,
was
you go
just-
back to
yeah.
2017, we're up 22% sales activity. So you can't really compare this year
Man, that's
to
so
2021 and 2020 because that growth was unsustainable.
It was an
Is that talking unit sales?
That is talking sales activity, yes.
Yeah,
so
yeah.
that's
And this is what I tell people too when sellers are like, oh, I don't know, I hear things about it there. I'm like, well, I mean, it's still the 3rd best market in the history of the world. So, 2021 was the best year ever. 2020 was the 2nd best year ever. 2022 was the 3rd best year ever. And 2019 was the 4th best year ever. And then probably in close competition to 2012 after the, ship start here thing. So to hear that actually quantified there, that we're still up compared to 2019 and 2017, which were both strong years, is really, really interesting to hear. And it reflects kind of what we're talking about. Like, people are like, oh my God, my home is taking 30 days to sell. I remember when like you would
30
brag
days
about
is
like
great.
the industry average is 110 days and I get mine done in 97 and you were patting yourself on the back like you're some sort of big deal.
Right. And you look at, that was units that I quoted earlier. If you look at the average sale price, again,
Oh, yeah.
going
Yeah, that's
back to the
up
quote
big
in
time,
All Nova Scotia, and not picking on All Nova Scotia, but
Yeah.
it's what I saw last night, most recently.
Yep.
If you go back again to 2019, again, quote unquote, the normal year for across the province, sale prices are up 65%.
Yeah.
From 2019.
Well, this
so
thing-
think about that.
Yeah.
That you invested $100
Yeah.
and now it's worth $160 2 years later. Who doesn't want that return on investment?
Yeah.
Right?
Insanity.
We're also still up even year over year, like August or September versus September of last year. We still are up. Now we've been giving a bit back since, the peak, whether that was March, April, May, June, whatever the peak was here locally. We're giving some back there, but year over year we're still up. But having said that, obviously, what they're saying is it's cooling a bit from the pace that we were on, right? There's something to be said for trajectory, and we're not on that same trajectory. Do you have any thoughts as to where things might be headed? Any insight to where we're going in 2023? Because
Sure.
people are trying to look forward.
Well, first, I'm going to state the caveat: I'm not an economist, and I don't have a silver ball. And
The
if I
economists
did,
aren't
crystal
getting it right
ball,
either,
and if I
so
did,
that's it doesn't matter.
I wouldn't be sitting here. I'd be off on my yacht somewhere
Yeah,
in the
yeah,
Mediterranean,
exactly.
right?
I'm technically an economist, and I'm sitting here, and I don't know where it's going to go either. So who
But I
cares?
look at it, the Nova Scotia real estate market is kind of sort of steady Eddie. We
Yeah.
don't have the ebbs and flows that Toronto, Vancouver have, the peaks and valleys. Like
Those
we did
aggressive
we did a
markets.
study on this a number of years ago, and if you were to chart out price growth and things like that in the province, it's just a steady upward climb.
Yeah.
Yeah,
Take 2020 and 2021 out of it, so prices are going to continue to climb. The 2 to 3%, which is a normal climb,
A healthy climb in some
a
sense.
healthy
like-
climb.
Oh, it's 100%. Like,
And I think the market's going to stay that way. I mean, we obviously had, I hate this word, but unprecedented demand in 2020 and 2021. But I think we're getting back to our normal balanced market a little bit.
Yeah.
So I think 2023 will be, will it be as good as 2019? I don't know. But I think it'll be a healthy market for sure, because we still have that quality of life that attracts everybody in Nova Scotia.
Do you think in like you're looking past, so the next years, I agree with you that I think there'll be a bit more steady Eddie, and I think although things are slowing down with interest rates and the other issues that are taking place, there's still a very strong demand that'll make up for kind of the pullback, I'll call it. Do you see in the future? Do you think we'll ever see those years? You kind of already said before, you don't think you'll ever see crazy years like that again. But I always, and it was funny, like last year, so many people would say, we're gonna be like the next Vancouver. Do you think that'll ever happen on the Nova Scotia side of things? It's all immigration driven, in my opinion. And like, I've heard rumblings of them slowing down the immigration. Like, do you ever think that'll come to be a thing where we're going to have this like continuous precipitous growth that's going to cause us to become way more dense and priced at a very, very high level?
I don't think so. I think we will get density in the
Yeah.
city. I think that's a goal of the government, all levels of government, is to create some density. But I think we're in a unique time in that there's also an issue with housing supply
Yeah.
that is there now that wasn't necessarily there that drove the Vancouver and Toronto markets. So,
Yeah.
and what I mean by that is they weren't addressing the housing supply.
Yeah.
So it's a simple economics, to Chandler's point, supply and demand. So if there's
Yeah.
very little supply, the demand, and there's high demand, your prices go up.
Yeah.
So right now they're dealing with the housing issue and the housing supply.
well, they say they are.
Well,
I mean, whether or not they can get it under.
Well,
or
there's no silver bullet. It's going to happen. So to answer Neal's question, I think they're taking steps. Like last night, for example, again, I'll go back to All Nova Scotia. It's what the first thing I look at in the morning. Halifax just approved tiny homes and shipping containers for dwellings.
Oh wow.
So
No way. I didn't see that.
Backyard
That's cool.
suites,
Backyard suites, tiny homes means a smaller lot size, et cetera, et cetera. And one of the things, like in when I go to conferences, one of the things I'm hearing, because what happens in the U.S. typically flows into Canada.
Totally.
Today's home buyer, first-time home buyer, doesn't necessarily want the 4,000 square foot home with 5 bedrooms, 3 baths. They're comfortable in a tiny home just to start off, just to get going.
Yeah.
Co-ownership is a thing that's becoming more and more popular in the U.S. It's starting to make its way into Canada as well. But there's actually a brokerage in the U.S. that is solely dedicated to co-ownership now.
Right.
Interesting. Actually, I've heard about that. Yeah.
Yeah, and I think what's interesting with some of the modular technologies coming out is that they can actually build a structure that is pre-designed to add on to it over
Absolutely.
the years, right? Like, so you could say, like, listen, the home I want one day is going to be 2,200 square feet, but today I'm buying the 1,000 square foot model, knowing that I can do a 2-phase addition, and it's already prefabricated that one day they can show up, they drop that piece on your pre-existing footing, and you're good to go. So I do think you're right. A lot of those things are going to be coming down the pipeline. Whether or not they can, pass the legislation and the code stuff, because unfortunately sometimes the councillors and the politicians come up with these grand ideas, and then you go to the actual city to get it approved, and they're like, we have no idea what they're talking about. They said we can do this, but we don't know exactly how the sewer lines are going to be run. We don't know the code stuff, and they have to get to the point where all these prefab structures come pre-approved code-wise, that they can literally just drop them on site and they've already been signed off on by everyone, because that's the only way we're going to go quickly. But again,
so you asked earlier, Neal asked earlier, what does NSAR, Nova Scotia Association of Realtors, do for its members?
Yeah.
This is one of the things we'll be advocating on.
Yeah.
And we've been advocating, with HRM and other municipalities on tiny homes.
Yeah.
Not necessarily the shipping container dwellings, but
Interesting.
we've been advocating for tiny homes and smaller lot sizes, because right now we're the missing middle, we like to call it. The homes that are between 350 and 500,000.
Yeah.
Yeah.
Those are the ones that are quote unquote attainable for first time home buyers when it comes to making your down payment.
Yeah.
Not everyone can afford the $500,000 plus home.
Yeah.
So, but if you look at it from the developer's point of view, they're selling the $750,000 home before it's even built.
Yeah.
So why would they focus their efforts on a smaller? But if they had a smaller lot size, the numbers work for them.
Yeah,
Yeah.
And if it takes them,
Same amount of
$50 to $60,000 to get the lot ready, by the time you have permitting and all your infrastructure costs, and then you have to charge HST on that to a developer to then make their margins, and the developer's like, oh my gosh, I'm into this lot for $100,000, and I'm going to put a $350,000 house on there. Why would I do that? Right, I'm going to do something bigger to try to get my margins up a little bit. So they need to, they need to fast track some of these subdivisions. They need to allow them to shrink the sizes. They need to do these things that they're getting into with like cluster housing. And if you're going to, because we need to be honest about our infrastructure here, it's antiquated and it's way behind
It's falling
what a
behind
city
or very
like us would
behind.
need, because it's getting to be a little bit silly that if you drive 20 minutes, you hit well and septic. Like that, for the size of our city, that's getting a little bit silly. But if that's going to be the case, if we're not going to invest in the infrastructure, then you're going to have to allow people and make it more common for people to share common wells, common septic, so you can shrink these lot sizes down,
Fairland
because it's a
condo
little bit
style.
absurd, right? Like these are like becoming bedroom communities, and they're on 1.5 acres with well and septic, and it's for people driving into the biggest city in Atlantic Canada. It doesn't make sense, really.
Yeah.
And as soon as you can do that, then your lot prices drop precipitously. You can get way more density, and there's going to be a lot of pushback on that. But these are all the things that need to happen simultaneously. To your point, it's not a one silver bullet. It's going to be a bunch of stuff, and I'm just worried that we move at the pace of erosion, whereas the housing market moves at lightning speed.
Sure.
And immigration is moving much quicker than legislation as well. So I'm not maybe as confident that we're going to get ahead of it and prevent some of these things, because I do feel 5 to 10 years from now, this is going to be a very expensive city. It's already becoming quite an expensive city, but we are on a peninsula. We've been recession resilient for all kinds of reasons. Even right now, we had Tiff Macklem here, and he gives the same speech probably to every group that he talks in front of, but he says, you guys here have done pretty well because you didn't really have the same boom as other provinces. It's like, what are you talking about? Like, we've been on a rocket ship, on par with even the hottest markets in the country for the last 2 years. Speaks to the fact that he maybe doesn't know exactly what's going on here. But the reason we've been resilient here is because, we have a super high public sector, and they don't, experience job loss. We have been still, relative to the rest of the world, pretty affordable. And we still have a lot of pent-up demand, a lot of immigration.
There was a lot of immigration perks
Yeah.
that allowed for it. And then, I think the migration I think a lot of that might pull back, to be honest, but
Yeah,
there's a lot of
I
migration
think you
because there
could be
wasn't
right.
affordability at the start
Yeah.
that allowed people to come and be a part of it.
But
And
if
we-
you look at Halifax, or I have to talk from a Nova Scotia point of view,
Yeah.
but I will talk Halifax as well.
Yeah.
If you look at it though, and you compare us to other major hubs in Canada, we're still very affordable compared to
Totally.
them.
Yeah.
I think part of the reason though why we saw such drastic price appreciation in 2020 and 2021,
Yeah.
we were on the precipice of being discovered by the rest of the world in 2019, and I think
Yeah.
COVID sped that up.
Yeah.
And we were undervalued
Yeah.
Oh,
for a
100%.
long
Yeah.
time. Like if you, I'm looking in your beautiful office space here, and I can see across the way. And if you look at King's Wharf, and I did a tour of one of their 2-bedroom condos.
Yeah.
And at the time, this was pre-COVID. At the time, it was priced just under $450.
Yeah.
And I'm thinking, if you plunk this
Oh,
in the
for sure.
harbor in
Yeah.
Vancouver, it's 1.2, 1.3.
Yeah, yeah.
Oh, yeah.
You plunk this in Montreal, it's approaching $1 million.
Yeah.
You put it in Toronto, it's again 1.2. So we were undervalued, and our quality
time.
of life is second to none anywhere in the world. I would put our quality of life up against anywhere in Canada for sure.
100%. I tend to agree. Like for me, the one thing is traffic and driving. Like
Well,
it's gotten busier.
There is that.
Yeah. Well, no, but it's not bad though. In relative spec, when I talk
Yeah.
to a lot of my clients that come in from Ontario, they're like, okay, as long as I'm an hour from my office, and I'm like,
I know.
well, we can buy a house in Toronto then, because like there's nowhere in the city that you're an hour away. Like
Then they live here for a year and a half, and they're like, "Oh, I can't stand this 20-minute."
And this is-
It's
this
true.
is-
You get spoiled.
Exactly. I was in Ontario before, and I commuted on a long commute to school every day. And then I came here, and now when I go back, I can't fathom like getting on the highway and sitting in gridlock traffic for 30 minutes. I'm like, what is going on here? When there's a slowdown on the bridge, I lose my mind. I'm like, all right,
Yeah.
I'm 5 minutes behind schedule now.
But so like I mean we're saying all these reasons that we still are affordable relative to some other things. That's a little consolation to a lot of buyers who still are struggling to enter this market. So
Couldn't agree more.
You know, what are your thoughts on the challenges that a first-time home buyer is facing, especially right now as rates continue to rise?
I've given this a lot of thought, to be honest with you. And the interest rate thing, I kind of take a little bit with a grain of salt.
Yeah.
And let me explain why.
Yeah,
We had free money essentially for a decade.
It was insane. Yeah.
Interest rates. You get a mortgage for under 2%.
Yep.
Hello.
Yeah.
Like I bought my first home. I'm not going to age myself, but I was happier than anything to get a mortgage rate under 8%.
Yeah.
I think we're now officially at the point where these are the highest interest rates in 16 years. So for the
Right.
last 15 years, which is my entire time in the industry,
Yeah.
like I remember there was one period where there might have been a rate of like 5.25, maybe.
Maybe.
But for the most part, you were, 4.99 was the highest interest rate I've seen for 15 years. Most times they were somewhere between 3.69 and 4.39 was kind of
I know
that
nothing
range.
over 4%.
Yeah.
Yeah, and so I think we were a little spoiled. I mean, a decade is a long period of time to go with quote unquote, pretty
Yeah.
cheap money.
Yeah.
So I don't get overly concerned when I hear. I mean, I feel the pain. I get it. I understand that.
Yeah.
But until it gets double digits, that's when I start to freak out a little bit.
Yeah.
Because if
throw
you
that out
when
there
you
to the universe.
no, I mean I would.
yeah, I hear you.
But I mean, what we've heard is there's probably one, maybe two more minor increases, and then they'll get inflation under control, and then they'll start to ease back a bit.
Yeah.
That's what I'm hearing. Anyway.
Yeah, I mean the market's building in 100 points by the end of the year, which would be 50 in October. Well, I think this is going to come out after that 50-point increase on October 27th or 28th, and then there's another meeting in December. We were joking about this on another episode of whether or not Tiff is going to give us a Christmas break. And you said no.
I don't think. I think there may be more than 100 points to come, but
I
that's
don't think there's going to be more than 100 points before the end of the year. But
not before the end of the year. I mean, over the course of the next year, I think we're going to see more than 100 points of growth. But I know what you mean. We're still, even with that, like if you put 100, 150 points out, we're still on a variable rate 6%, which is not like the end of the world. And again, it's a very realistic rate to be able to work with. The biggest thing is there is people who obviously over leveraged a bit that might take a bit of a beating. But I don't think a lot of times it's the young buyers because they went through a lot to get into their mortgages. Like the banks are hard on them if they have student loans and car payments, and they make them qualify at
You
higher
had the
rates.
whole stress test.
But also
Yeah.
we need to change the approval
employment's
process
great for them.
because even if they don't want to take the variable rate, there's a good chance that they don't qualify at the fixed rate, right? Because they have to have 2 points or 5.25%, right?
Yeah.
So for a long time, they were actually incentivizing people to take variable rates and saying, I can't believe all these people took variable rates. It's like, well, that was how the whole application was structured.
Yeah.
You know, so you were sort of forcing people in a rapidly increasing market. Obviously, they weren't being forced, but in order to qualify, in order to get into the market and be competitive, that's kind of what they had to do. Because you represent agents, realtors all across the province, I'd be curious your thought on this. Like, people ask me this all the time, like, what needs to happen? And we can continue to build here in town, and we need to do that. But we also really need to get back to a point in Nova Scotia's history when you truly did have these hubs across the province. Like, Sydney has to be a thriving hub. Truro has to be a thriving hub. The Valley, Kentville, Windsor has to be a thriving hub. And the South Shore has to be a thriving hub beyond these places just being tourist destinations. These have to be people where places where young people can go and work in really productive jobs, raise families, and that will alleviate some of this pressure. It'll also be way better for the sustainability of our province as a whole if those areas are thriving. And there's a period where they were just absolutely struggling, period. And then they've kind of been reduced to tourist centers. And I'm not speaking ill of these areas because these are phenomenal places to live. But if people can't stay there and work in jobs to provide a good livelihood for their families, they don't have no option, right? And this net loss of young people from those areas was really problematic. It's been to the benefit and to the price pressure of Halifax, but we need those areas to be thriving, and whatever has to happen at a provincial level to encourage that should be looked at as a housing initiative as much as an economic initiative. That will alleviate the housing pressure. And right now there's booms going on there, but it's booms because in some respect because there are aging populations there. So people are building apartment complexes and those booms are happening. But hopefully with that, we'll see some younger people move there. I know we're working with clients. I've had clients buying Kentville, clients buying Bridgewater.
I have a lot of people buying outside in those areas, but I think like that natural migration as owner occupied. Even someone who worked on the podcast before is now living in Kentville. But I think there's a natural migration in general over the course of history from smaller areas into cities because there's just more opportunity available. In Canada, it's also I think like it's more pronounced because we are not super industry, like we're not for industry in general, and all those towns came to be through industry. And so when you shut down all the industry in all these places, every time I see it, another pulp mill's dead, another factory shut down, another tax implication has now shut down another old business. Every time one of those go in, that's going to kill another set of jobs. And we've talked about before, people go where they need to make money and where they're going to make money. And if you can't go there and make money, great, the houses are $100,000, but there's a reason. It's because you can't make any money there. So,
but there was a real political push to move people to cities because it's cheaper to have them and stack them on top of each other. It's easier to service them. And then there was also kind of this sentiment of, well, those industries are bad. Mining is bad. Fishing is bad.
Everything's bad. It's an industry.
Bad, right? So we should be having those jobs. You know what I mean? And it turned out, I think history is proving that idea was wrong. You know, yes, it may be cheaper from a government standpoint, an infrastructure standpoint, to have people in cities, but from a mental health, a quality of life, and long-term housing affordability, it makes more sense for those towns to be viable.
I agree.
And again, we're kind of digressing. We're taking up all the energy here, but I'd be curious to hear your thoughts on that, where you represent realtors working in all of these, and they've had busts, like they've had boom, I should say, a couple years as well.
So, interestingly enough, I've been doing, or my goal is to do like a province-wide tour, visiting stakeholders and our brokers in the province. So far, I've visited Cape Breton and the northern region of Nova Scotia. So
nice.
Cape Breton pre-COVID was on a roll. Like they were booming. You know, there's a lot of good things going on in Cape Breton.
Yep.
International
Cape Breton University is attracting international students. Interestingly enough, they're actually creating enough jobs there that they're able to. There's opportunities for them to stay.
They're retaining them.
The best story I heard coming out of that is Cape Breton Transit was looking at shutting down bus routes. But because of the influx of the international students who take the bus everywhere, they actually had to add routes.
Oh, no way.
So there you have, jobs being created for the bus drivers, the transit workers, that sort of thing.
Also makes the whole island younger. Just right away, the average age drops.
You have an investor from Europe, and then his name escapes me right now, but look at what they're doing at Cape Smoky. Trying to make that into a year-round destination rather than just for the summer. And that will create some housing in that community because the workers will work in the wintertime and in the
Yeah.
summertime, right? So
Yeah.
there's little things like that are going on. Amherst
Yeah.
used to be, and no disrespect to Amherst, but it used to be a ghost town. Like there were, but now there's a lot of development going on in Amherst, and you see home, like I was just talking to, well, actually our vice president is from Amherst, and
Yeah.
they're running out of homes to sell. Like they have the same problem that Halifax has,
Yeah.
right? So people are moving to there because for two reasons. Like it's a hub. It's if you represent the Atlantic provinces, if your job represents the Atlantic, Amherst is perfect because you're right there for New Brunswick and you're right there for Prince Edward Island,
Yeah.
and you can do Nova Scotia maritime provinces. You
Yeah.
could say.
Yeah.
Yeah.
So I mean that's what they're seeing is a little bit of influx of that as well.
It's amazing how like the people from away see this potential here that is right under our noses.
Yeah.
And it's always people from away who come and
Are we moving quick enough is the question. But with kind of what I said there about industry being kind of disliked, I think realtors can also be almost an industry and a business that has negative sentiment around it, especially in times of boom and or bust, because a lot of people tend to feel like we see it all the time. They're like, well, realtors are setting the prices. They're forcing them through the roof. Like this is all their fault. And or the vice versa. They undersold my house because they got something for it. They get paid less. Like, I don't know. But what do you say? Like, where do you see, how would you explain to people, like, what's the value in a realtor? Why do you need one? And even in the crazy markets when houses are selling themselves, like what's the value in us? We've talked about it, but what would you say?
That's a big question.
Yeah.
With a big answer. Like seriously, where do I start? So let's start with the housing market that we just came out of.
Yeah.
So all we heard housing are selling themselves.
Yeah.
Okay.
I did literally nothing for the last 2 years.
Yeah. Right. So I would argue that was probably the hardest market for
Yeah.
realtors to come out of.
Yeah.
Number one, you have seller expectations that were through the roof.
Insane.
You have 25 offers coming in for one property.
Yep.
You have to go through all those offers, present them to your seller, and help them make an informed decision on, because price isn't necessarily like if they, there's
20 other factors
There's
involved
20
in
other
that.
factors that are involved with that the highest price might have had conditions on the offer, but there was another offer that waived all conditions, which isn't necessarily a good thing either.
Exactly.
But you have to talk your client through that.
Yep.
Do realtors set the price? No, they don't. They make a recommendation. The seller ultimately sets the price for the home.
Yeah.
And again, it goes back to economics 101. It's what the buyer is willing to pay.
We could set the price at $10 million. If we don't get any bids, it's not worth $10 million,
Exactly.
right?
And why do you want the value of a realtor? Well, they're your navigator. They're your guide through the whole process. There's so much more than just slapping a sign on the lawn and throwing it on the MLS system. You have to help guide them stage the home. This will sell your property fast. So going to the bad times, or the slower times.
Yeah.
This is what will help price your property or draw more eyeballs on your property. How to stage it properly. Yes, you might want to price it here, but unrealistic. We can price it here, but it's gonna be crickets.
Yeah.
So you might want to price it here. It'll move to Chandler's point. It'll only be on market for 35 days, which is fantastic. I mean, a lot of people lost sight of that over the last couple of years, right?
Yeah.
Like 30. If you can turn around your home, which is the biggest purchase that most people will ever make in their life, in 35 days.
Yeah.
Hello.
That's
great.
That's amazing. And again, you said it earlier, but things used to be on for 100 days, 110 days, and we were excited to get it done in 3 months. And now I think we have the recency bias of everything sold in 14 days.
Totally,
And so realistically, to be on for 30, 40 days is not a big deal. And one thing I'll mention, and not I don't really care because I came from not being a realtor before, and now I kind of understand our value now that I'm in here. But you look at for sale by owners and online sales that people do on their own, they will usually sell for less. They might be running into more legal issues and things like that. And it's because it's not a transaction that you make frequently. This is something you might do. What's the average? Every 7 years, someone turns over a home sale, whereas it's every 7 days we turn over a home sale.
Realtors do this.
Right? This is our job. We are trained to do this.
For most people, it's the only time they'll ever buy or sell a home.
Yeah.
Or maybe they might do it 2 or 3 times in their lifetime, but a realtor does it every day.
Yeah.
And an interesting statistic, most for sale by owners start off but 90%, 97% of them actually convert and go to a realtor.
Yeah.
So stats don't lie.
Yeah.
You know, so
Well, it's also like, you know, the only reason someone would sell without a realtor is to save the commission. The only reason someone would buy direct from sellers to save the commission. Well, you can't both save the commission. So one of you is supposedly ending up ahead, and the other person is a net zero with no representation. The other thing is, in a hot market, you know, would you rather a small number of people with their eyes on it, or would you rather the madness of everybody bidding on it? Well, obviously you prefer the latter. And in the slow market, would you rather very few people looking at it, or as many people as humanly possible? Like it defies logic to think any other way. But you know,
couldn't agree with you more. Like, you know, once you put the property listed with a realtor and it goes on the MLS system, it goes to realtor.ca, which is the #1 real estate website in Canada.
Yeah.
You know, and that's where people, and we know that buyers start their search online. So where are they going? They're going to realtor.ca. And
Everyone's
that gets eyeballs on your listing.
Yeah. I have a question for you. So we've had on here Open Bid, and we've talked about a few other different platforms that are basically trying to change the buying and selling model a little bit by how they do it, and utilizing online platforms. And in some ways, I don't want to say like cutting out the realtor, but effectively the business will require less from realtors, or maybe it'll only
especially
require
on the buying side.
Yeah, it might only require one realtor through the transaction. Do you see merit in those things? Do you see those things coming into practice? Is there concern for you, or are you guys trying to get ahead of the ball and get involved? Like, what's going on there?
Yeah, that's. Is it a huge concern for me? Yes, because I don't think a lot of people, the public, truly understand what a realtor does on a day-to-day basis and how much value they actually bring to the real estate transaction.
Yeah.
Like there's a million different things. Like when we were creating our licensing course, there's 367 skill sets that a realtor has to have, like marketing, negotiation, you know, being able to proofread a contract, being able to know how to write a contract, how to look out for their client's best interests. Like there's a million things that they need to do. Right. So I think that goes underappreciated sometimes.
Well, I think it's also interesting how like there was a lot of conversation around that when the market was going crazy and there were multiple bids, and people understandably were looking for a bit more transparency. Like I think, and I'd be curious your thoughts on this, like as an industry, there was in the past a bit of a concern that the more transparent we were, the less value we could offer to people because we'd already be giving away the information. And I think that's changed. People understand, like, no, the more informed your client is, the better off. And what we do, to your point, is a lot more than just be like, well, this is what it's on the market for, and this is what the home down the street sold for. It's interpreting that data. It's being competitive in the marketplace. It's all these other things that you kind of touched on there. But now as the market slowed, and people aren't just worried about, well, there's 16 bids here. I want to know exactly what they are. I want to make sure this is totally transparent. I hear less and less about these multiple, like these bidding platforms, because it's not as relevant in this market.
In my mind, the alternative is, okay, so you sell a home and you want transparency. Then you go stand with a paddle on a front lawn and you have an auctioneer and you just... There's your transparency.
Which they do in Australia. We came to find out.
Only certain parts of Australia, but I mean, again,
we don't have the weather here for that.
Right? But I mean, again, like who's advising you? Who's telling you to raise your paddle? Who's that's like there's just it should be articulating this a little bit better. But to your point, in a down market or when the market slows a little bit, that's when you need a realtor as well, because they're going to be able to. They have the tools at their fingertips, like the home pricing index, which we just adopted this year, which uses neighborhoods. Like it has a set of criteria for a home in a neighborhood. So it takes away the average price, because we all know it only takes $1 million sale to skew everything. It actually looks at the median pricing, so they can say you have a 3-bedroom, 2-bath, 1,200 square foot home in your neighborhood. And it'll look at the same set of criteria, not identical, but the same set of criteria in different neighborhoods that are near where you are, and say, this is what you think it's worth, $750,000. Well, here's what all the other ones are selling for, and it's $625. So yes, we can put it on for $750, but chances are I'm gonna come back to you in 3 months' time
for a price reduction.
And for a price reduction, you're not going to be happy with me. You're going to go with another realtor time has it passed, and they're going to put it on for $625. So really, you've wasted.
You've damaged
4
the
months
reputation
of
of your
time.
home, and you've wasted a bunch of time.
Right.
And things may have improved, but they may have also degraded. So
Exactly. So, I mean, there's so many tools that realtors have access to that no one has access to, right?
I'm going
Are
to put. Sorry, you go ahead.
I would say, are you guys implementing anything regarding the bidding process? I had heard some rumblings that you guys were potentially adding in some stuff regarding.
So CREA has a project right now called Clear Cooperation, and it kind of deals with that. So there's a white paper out there right now,
Yeah.
and that's being distributed to the provincial associations this fall. Not here yet. I guess we realize we're in the fall right now, but we haven't had the
Received it.
presentation
Yeah,
yet. Yeah.
because I even have felt that as a realtor, where they're like, "Oh, and we have an offer in hand." It's like I want to be like, "Prove it,
No,
prove it."
Sure.
Right? And there is something lacking there that seems so common sense that we need to address it. But I'm going to put you on the spot here.
Sure.
And I can understand if you need to be slightly diplomatic with your answer. Sales transactions are declining, right? The volume of sales are declining.
Realtor numbers are spiking.
And realtor numbers are skyrocketing through the roof. There's also been an instance that for the past couple of years, new agents entering the industry have an experience that is far from typical. And I actually had the situation where a newer agent, who had been in the market in the industry for a while, like 9 months or something like that, was like, so how do I do an amendment? Because they hadn't had to deal with an amendment on a transaction yet, because every transaction the buyer had no leverage in it, had to close. Do you foresee an issue? Because ultimately, your members are going to come to you with new problems in these coming years as volume per agent drops off a cliff, and be it mental health, be it debt servicing, be it financial planning, be it some pushback about the number of agents being licensed, all of these things. Like, what are your thoughts on the other part of this boom, which has been the boom in the number of agents?
Yeah. So I don't think I have to be diplomatic in this answer. I've been with the NSAR since 2004. And prior to my role as CEO, I was the director of finance. So it was my job to create a budget for the association every year to present to the board of directors. We have been predicting a decline in membership for 18 years. And, and I mean this with all due respect, realtors don't retire.
No.
They don't. It's not like other
No, they do
professions and
not.
other industries.
Going to the grave signing a paperwork.
But I mean, when I started in 2004, there were just over 1,000 members across the province.
Wow. Okay.
And now we have 2,060. I think when we hit a recession in 2016, we actually was the first time that we had a decline in membership over 100. We went from a peak of 1804 down to 1650.
Interesting.
But we bounced right back up, like within 4 years.
Yeah.
So will the realtor numbers, will the membership numbers fall off a cliff? History says no. But again, we've never had growth like we've had
Yeah, but
the last 2
I'm
years.
saying, like, I view that as potentially problematic.
It all depends. Like,
Might be a more balanced and competitive market in some sense.
I'll put it this way: TREB, the Toronto Real Estate Board, has 70,000 members,
That's
but
insane.
only about 5,000 do more than one transaction a year.
What are those other 65,000 people doing? They're
There's a
paying
lot of
fees on
benefit to having a real estate license.
Yeah,
Like you
sick
look at it
Instagram
from
handle.
the tax point of view, right? Like I
You can
mean,
be huge on Instagram. Yeah.
well, I mean, if I don't know, I just don't think you're going to see right now, even no matter what our numbers are, it's the principle of 80-20.
Yeah, but have you put any thought towards the support that some of these agents might need in the coming
Absolutely,
12 months?
100%.
Yeah.
So you had mentioned, we'll call them new realtors getting out there and not knowing how to write an amendment. The whole licensing course, we're right midst in the middle. We've submitted 11 out of 14 units to the Real Estate Commission, who actually we
Administers it.
contract.
Yeah.
The whole licensing course is undergoing a revamp, and a lot of it's going to be on better preparing the students to hit the ground running, so to speak, once they become licensing. So a lot of it is focused on contracts and writing an amendment and things like that, so they're better prepared. But a lot of this falls on the brokers as well.
Oh yeah, 100%.
So the
100%,
brokers
yeah.
are responsible. They're not supposed to be. They are responsible for the agents under their wings.
Yeah.
They're supposed to be providing training to what the licensing course gives you, for lack of a better term, the bare bones. This is what you need to know to trade in real estate.
Yeah.
The brokers are supposed to differentiate their people from other people. It's your competitive advantage. So make them
Continue to
more
elevate
professional.
them. Yeah.
Provide them the additional training that they need. Is it a perfect system? No. It's not. And you're always going to have a learning curve no matter what profession it is.
Yeah.
You know, would you want someone fresh out of medical school performing brain surgery on you? They have to learn, right? Along the way. There's a mentorship piece that goes there as well, right?
Yeah.
So
Yeah.
I had some students learn how to stitch on my arm once, and it was no fun.
Same here on my back.
Still
but
got
I
the scar.
I understand your point 100%, and I hear it from the brokers all the time, like the new members don't know what they're doing.
It's not
But
that,
when
like,
I look at the errors and omissions, it's not the new members.
no, it's the old agents. They're the problem.
We start to lax up a little bit as time goes on.
No, I just think more so they are going to have one experience of the market where maybe times were good, and then there's going to be a lot of challenges ahead. And for agents who've maybe been in a bit longer, they've seen these ebbs and flows before, they can better ride it out. I just think there's some people who are going to be, when the average transaction per agent is something like 11 or 12, in a market where volume shrinks by 35%, that means someone's going to go from 12 sales potentially down to 8, right? And the repercussions of that through their own personal life is something that I think we're going to have to deal with as an industry on some level.
Maybe I can answer your question a little bit better. Will there be a churn? Yes. Will we have 300 members leave the industry? Yes. But we'll also have a couple hundred come into the industry.
we will.
So
True enough.
the
Yeah,
net
that's
effect is
true.
really you're only losing 100. So I guess
constantly-
maybe to better answer your question, will we see the churn? Because the ratio out there is, and I just read this and I'm drawing a blank because we're on a podcast and I'm put on the spot. But I think it's like 3 in 5 realtors don't make it, or 3 in 5 new realtors don't make it past 5 years. I think.
Oh
that's
gosh,
statistic.
that's actually shockingly high. Of my course, there's me and one other dude, and it was like that 5 years in.
Sure.
Yeah.
So, but there's people that come through the pipe that replace those 3 that left.
Yeah, totally.
I say it's a high turnover industry at the end of the day because you're on your own. There's a bunch of reasons why, and it's not as easy as everyone thinks. Everyone comes in thinking it's the easiest. Like, oh, this dude sold my house and we paid him $20,000.
Yeah, they come in, I'm going to reinvent the game.
Yeah, I could do that. But anyways, we're running out of time. But I appreciate you coming on. Is there anything else that you wanted to mention or say before we head off?
No, I just want to thank you for the opportunity. This was great.
This
It was
was
my
awesome.
first podcast. It was
go.
definitely you guys made it easy.
Awesome.
So,
Awesome. We
Thank you for
appreciate
the
it.
opportunity.
Yeah. No.
And for all your listeners out there, definitely use a realtor. They're worth their weight in gold.
Well, that's the other thing that we've tried to do this to not only flex our level of expertise or what we think we know, but to kind of keep everyone informed on the industry. And I think if people get something out of that, they can understand through that the value of a realtor, because there's other great professionals like ourselves out there working hard for people. So it's good people can see that. So
Yeah, thanks everyone for listening. If you're a member or a non-member and you have a question regarding being a realtor or the industry itself, leave it in the comments or shoot us a DM and we'll get it answered, whether it's from us or maybe Roger will respond to them too. So thanks again.
Thank you.
Cheers.
Thanks so much for watching the episode. I hope you enjoyed it. If you did, press like. Don't forget to subscribe. But also check us out on Instagram and TikTok. You can find all the links below. Thanks again for checking us out.